Oh, I'm so sorry that never knew. Oh, I'm so sorry about that. I never knew I muted my mic. Good morning once again, everyone. I'm so sorry about that. And I guess I will just have to do a quick recap of what I just explained so far. So I started with the importance of us watching my videos during the course of the weekend and said we have four pairs that we are going to be monitoring for this week, and we have the US oil, we have the GBPUSD, we have the USDJPY, and then we have the gold, which makes it the four instruments we are going to be monitoring for this week. And during the course of the weekend, I was able to share with you guys the our expectations for this week from a technical standpoint, and I would implore that you watch these videos before you come to this live session so that you will be able to have a better perspective into what I will be talking about here. And what we simply do here on the daily basis is to look at the 1 hour time frame majorly. So I wouldn't be going into the higher time frame. So for you to have a better understanding into the structures we have identified on the 1 hour time frame, I will suggest that you watch these videos. In fact, you can see the link to this video in the description box of this current video you are watching right now. So try and watch it so that you can understand what's my thought process before getting into this current market structure here on our 1 hour time frame. And I also laid emphasis on the nature of the fundamentals behind the market right now, as we have the banking crisis in the US. It also extended to the Europe, where we had the issue with the Swiss credit bank. And though we have some bailouts presently, which happened during the later part of yesterday night, and we want to be seeing how the market is going to be reacting to this development. And obviously, we also saw how the US oil tumbled to over 14% decline to the downside during the course of last week. And I think it is more of the fundamentals around the banking crisis. You all know the banking sector is what finances the trading of all these commodities, and if the banking sector is having issues, then definitely investors will be pulling money out of the oil at this particular point in time. And this is exactly what we have been seeing here in the last 4 to 5 days in this market. So what we're simply going to be doing here this morning is to review the charts, look at it from a technical standpoint, and identify the psychology behind this movement in order to be able to, so that we can position ourselves in such a way that we can catch any trading opportunity for this week. Then we also looked at the economic calendar too, as well, as we normally do this every morning, to ensure that we are in alignment with the fundamental expectations in this market. And what we saw on the economic calendar is that we do not have any macroeconomic event to look forward to for today, so we shall be relying on our technical skills to identify critical structures that we want to be using to guide our trading activity. So we don't have any macroeconomic event until Wednesday, that is March 22nd, where we have series of events here that will definitely be bringing some liquidity into this market to drive price movement. And prior to this event, we are going to be seeing something like a consolidation phase choppy situation in the market, as participants major players will be stepping aside from the market in order to see how price is going to be anticipating this event, and after the event how it's going to be reacting to this event. So we will not be surprised if we start seeing consolidation phases probably during the later part of the New York session today. So with that being said, here let's dive into the current market structure. And the first commodity we are looking at this morning is the US oil. And on the US oil, I told you earlier that we identified a descending channel in my video, which I published during the course of the weekend, which further emphasized the strength of the sellers. And in fact, we were lucky enough to be part of the sell momentum as we rode this move all the way down to the downside throughout the course of last week. But this is not where we shall be focusing our attention right now, but the area we shall be focusing our attention is simply an area between the $70 area and the $65 level. And I told you that the $70 level happened to be the lowest point price had been prior to the breakdown of that structure last week, and we saw price action did a retest of structure to further emphasize the strength of the sellers at this particular point. And what we saw here after the breakdown of the $70 level and testing of the $65 area, we saw that price was caught within this channel, further emphasizing the indecision in this particular market. And you all know what we look out for whenever we have this kind of setup. We want to remain patient for price to either break out of the channel to the upside to give us an opportunity to buy, or price action break down the channel to give us an opportunity to sell. All this I explained in my video during the course of the weekend. Now, what we want to be looking at here is to see how participants in this market has been reacting to this current structure since the beginning of this week. And what I saw here at the beginning of the week, we saw a huge gap here, a bullish gap, a little bullish gap here, which gave us a sign that there were trading activities during the course of the weekend. And price action started this week at around the $67.50 level, which happens to be the highest point price has ever been for this week. And because of this fact being the highest point price has ever been for this week, definitely this level will be serving as the resistance point for this week. So we have that structure identified there at the $67.50 level. Now we saw some couple of buy pressure around the $65 area, which will be serving as the support line for this week. And there is one important thing about the $65 level here. It also shares a confluence with the support line of that descending channel that we identified earlier. This makes this area a little bit more critical, as we need to understand how price action will be reacting to the structure. So if at any point in time we cite a breakdown of the structure retest, then we want to be selling this market. And I told you, I shared this on my public platform this morning, that is on the TradingView platform. I have told us here that we should be having our sell stop order below the $65 area. As you can see, the week has started on a bearish note in this market, and there is a high chance that the $65 level will be broken to the downside. And with the sell stop order below that structure, we already have a sell position triggered after price action has broken down the $75 level, and at the same time the trend line, the support line of that descending channel. So with the situation of things right now, I told us all that we should be having our TP target at around the 61.50 level. And the reason why we have identified the structure, I took into consideration the previous impulse leg that led into this move. So this is the previous impulse leg, retracement back into the $70 area, and price action continued to the downside. And to project this TP target area, we used our Fibonacci extension tool, run it through the previous impulse leg here, and then we have an area around the between the 127.2, 1414, 141.4 and the 161.8 area seems most appropriate to have our TP target in the meantime. And it depends on how price action plays out in the next couple of hours that will determine if we are going to be extending our TP or probably leave it wherever it is at this point. But be rest assured that I will be jumping in the comment section on my TradingView platform to give you an update on what my expectations are if any sudden spring up happen within this current structure. So be rest assured I will be jumping in the comment section on my TradingView platform in that regard. So if you do have any question or you need me to make further clarification on that area you really don't understand, feel free to drop your comments in the comment section and I am willing to be of help. So I will be moving on to the next pair right now, and before I do that, let me run through the comment section and see if there are any questions before I move on. All right, so in the absence of no question, let's move on to the next pair. So the next pair we shall be looking at this morning is the GBPUSD, and like I said, I will be treating the 1 hour time frame here for you to have a better understanding into how we got to this point. You would necessarily need to watch the video in the detailed description box below of this video. Now we have a situation here. This is our key level which was identified in that video, and that is the 1.2222200 level, which I laid emphasis on in the video as a strong supply zone in this market. And looking at how price action has been reacting to that structure since the early hours of today, you can see that there is a little consolidation phase happening around this area, which further emphasizes the indecision in this corridor. We are going to be anticipating some choppy situations at the beginning of the week. Remember, this week is laced with series of macroeconomic events, and participants would not want to be jumping into any trade right now. So we are going to be a little bit risk adverse at the beginning of this week, and we're beginning to see this kind of setup evolving in the current market structure. So during the early hours of today, we saw the situation here formed up. Price has started the week on a bearish note here. As you can see, the week started at around the 1.22100 level here, which is the highest point price action has ever been this week, hereby giving us this as our resistant line for this week. And one thing I also want you to know here is that remember that this area we are in right now is within the seller's territory, and throughout the month of February we saw how the sellers continue to negate all bullish attempts within that area. So we are within that structure at this point, and for me at this point, it's there is a high chance that sellers might likely take over this market, but we need to be very, very patient for price action to give us a signal of where price will be going. Now we have the support line for this channel sitting at the 1.21700 level. As you can see, as soon as price got into the structure, we have been witnessing buy pressure around that area to emphasize the presence of buyers at this particular point in time. So with a simple channel we have here between the 1.22100 level and the 1.21700 area, you all know what we want to be doing at this point. We want to remain patient and wait for price action to give us the lead of where it wants to be going for this week. And as a result of this, we shall be having our sell stop order below the 1.21700 level, with the hopes that price action might break down that structure to incite a sell-off in this market. And at the same time, we are also going to be having a buy stop order above the 1.22100 level, where a breakout of that structure will definitely welcome a buy position in this market. So let's see how price action plays out in the next couple of hours on the GBPUSD, and be rest assured that I will be jumping right in the comment section on my TradingView platform to update you on how to manage this trade as price action evolves. So that is that on the GBPUSD. It's a simple setup here, so let's be on standby to be able to catch this trading opportunity. If you have questions, feel free to drop your inquiries in the comment section. Okay, thank you, innocent babe. All right, so moving on from the GBPUSD, now we are going into the XAUUSD, that is the gold. And on the gold this morning, the gold has started on a bullish note. Now remember, in my video, we identified the $2,000 level, which was a key structure in the XAUUSD chart, and I laid emphasis on how that level also was respected. I think, how long was that? Hold on a second, let's go to the 4 hours time frame so that we can see things more clearly here and be on the same page at this point. Okay, it is not identified here, so I think we'll just go to the daily time frame. So on the daily time frame, I showed you this in the video, where the last time price got into the $2,000 area was in the month of April last year. So it was exactly 11 months ago we saw price action come into the structure, and what we saw immediately price tested that area is that we saw a sharp rejection of that structure, hereby pushing price to the downside, and that led to that crash of the gold last year. Now the situation of things right now, price was approaching the structure prior to the beginning of this live session, and I laid emphasis on the importance of that structure here on the 4 hours time frame. And now when we look at what has been happening in this market since the beginning of this week, we can see that price actions started the week on the bullish note here. Hold on a second, let's see. Okay, price action started on a bearish note. This is the $1,990 level. I already did a publication on this on my TradingView platform. Price dropped into the 1,970, and we saw another bullish momentum begin from that. All in on my TradingView platform that we want to be buying the breakout retest of the structure, which has already been triggered here, and price action appeared to have broken out of the $2,000 level. Now at this point, the 2,000 level here, for those who are already in this trade, kindly move your stop loss to your entry point right below the 1,990. And one thing I'll be advising us to do here is that we want to see how price action will be reacting to the $2,000 level to decide if we are going to be adding more position to our existing trade, or we might be getting ready to sell, just like it happened during the month of April of last year. So with the situation of things right now, we had a channel at the beginning of the week between the 1,990 and the 1,970 level, and with the breakout of the resistance line of that channel, from a technical standpoint, there is a high chance that price is likely going to come back and do a retest of that structure for further confirmation. So if you had missed out on this opportunity here, we could stay hold on and see how price action will be reacting to the $2,000 level. We might have a situation here where price will probably come back, do a retest of structure. It could take 24 hours before this happens, so we need some patience here. It could take 2 hours before it happens, so we need to be very, very patient at this point, where price retests the structure, buy pressure resumes around this area to incite another wave of bullish momentum. So if you had missed out on the breakout of the 1,990 level, at this point I will be suggesting that we remain patient for price action to evolve into a tradable structure. Another thing that could happen here, if price action does not drop back into the 1,990, it could form a trend continuation pattern just above the $2,000 level. It could transition into probably a bullish rectangular pattern, something like this, a consolidation phase, probably last about many hours, breakout retest on our lower time frame, then we could join the trend continuation to the upside. But be rest assured that I will be jumping in the comment section on my TradingView platform to update you how as events unfold before our eyes here. So let's see what happens in the next couple of hours on this current structure. And for those who are already in this buy position, you want to be moving your stop loss accordingly to secure this position, as we might see price action do a retest of the 1,990 level to anticipate another wave of bullish momentum at this point. So let's see how it plays out in the next couple of hours. If you have questions, feel free to drop your inquiries in the comment section. And let me see if there are any. All right, okay, so that is that on the XAUUSD. So we shall be moving on to the last pair for today, which is the USDJPY. And on the USDJPY, like I said earlier, the dollar has been nosediving since the beginning of this week, and the dollar doesn't seem to be the most popular pair for this week, considering the events surrounding the economy at this particular point in time, from the banking crisis, from the Signature Bank to the SVP Bank, and now to the Fed interest rate hike, the possibilities of a 50 basis point hike and probably 25 basis point hike. So we have a lot of fundamentals surrounding the US dollar at this point. So it doesn't seem very popular at this particular point in time, and the fear for a recession is also very, very loud in the market right now. So everyone has been moving their funds from the dollar into safe havens, like probably the gold, the Japanese yen, for instance, and we begin to see this impact in this market. And during the course of last week trading session, we saw how the USDJPY dropped significantly, I think about 4% to the downside. So the Japanese yen gained like 4% during the course of last week, and we might likely see a situation where this trend will continue to the downside in anticipation of the FOMC coming up this week. Now, at the beginning of the week on the USDJPY here on the 1 hour time frame, remember I shared this on my video during the course of the weekend. So that is why I always say that it is very necessary you watch my video before coming to this live session, so that you would understand the importance of the structures whenever I'm talking about them in this video. Now, look at the 132.500. This is an area I told us all which will be serving as the yardstick for trading activity for this week. And one thing I said about the structure in that video is that following the breakdown of the structure during the course of last week's trading session, we might likely see price action come back to do a retest of the 132.500 level in anticipation of the bearish move to the downside. And this exactly what has happened in the last 8 hours now. With 10 hours, we saw price action come back into the 132.500, and this level here at the 132.650 area is going to be serving as the resistance line for this week. And after retesting that structure, we saw the situation here where price broke down that demand zone where it started the week at to the downside here. And for those who are taking advantage of this trading opportunity at the breakdown of the 131.700, well done to you. Kudos to you for being on standby. So what you want to be doing right now is to move your stop loss to secure this current position, and the most appropriate area to secure this current position is your entry zone at the 131.700 level. Remember, this level was the support line for this week that was broken here, and you all know from a technical standpoint there is still a likelihood that price action could still come back and do a retest of that structure in anticipation of a trend continuation to the downside. So these are things that we are going to be expecting in this market. Then I also shared on my public platform this morning as well that a breakdown of the 131.00 level will be welcoming additional position to our existing trade. And I hope you remember the importance of the 131.00 level on the daily time frame. I think I shared this in my video, and for the sake of clarity, let's run through that quickly so that we can see how important that structure is and how to look out for ways to manage our trade as price action currently trades around that structure. So this is the daily time frame of the USDJPY, which I obviously shared in my video during the course of the weekend, and this is the 131.00 level. And as you can see here, since the month of April last year and the last 11 months in this market, you can see how the 131.00 level has been a major determinant of price action in this market. It was initially a resistance point, but in the month of June here, we saw price action break out of that structure. We saw retest of structure in the month of August, and as you can see, this area has been a strong demand zone in the past. And a couple of, I think about 7-8 weeks ago, we saw how price action broke out of this level again, where we also took advantage of some trading opportunity at this point. Now price action is back at the 131.00 level, and so we need to be very, very, very careful of and to see how price action reacts to that structure to determine if we are going to be adding more sell position to our existing trade. So that is why I have said here that we want to be moving our stop loss to secure this current position, how price action reacts to this level. Like I told you, this level has been a strong demand zone in the past, so we might likely see buy pressure resume on our lower time frame, so we should take note of this expectation too as well. But if price action breaks down the structure and we start seeing probably a retest of structure on our lower time frame where sellers reject any bullish attempt to break back above that level, then we might likely be getting ready to join a decline to the downside, which for me at this point might be on a short-term perspective, considering the long-term bullish momentum in this market. So if I zoom out further into 2020, you will see how this the USDJPY has been on a bullish trend since then, and I further emphasize this using this bullish trend that you can see on my screen right now. So we might likely see price action come back into that range again to incite another wave to the upside. But if it breaks down that structure at this point, we might be seeing a massive sell-off in this market. So let's see how price action plays out in the meantime. So we are back to the 1 hour time frame, and let's see, hold on a second, on the 1 hour time frame, this is the structure we have here. So this is what we shall be using to guide our trading activity for this week. So we have the 131.00 level. So if you had been taking advantage of this opportunity right from the 131.700, you would have 2 positions running at this point. So for the first position, I told you all to move your stop loss to your entry point here, secure this current position while we wait out and see how price action will be reacting to this level. Are we going to be having a retest of structure, or are we going to be having buy pressure around that area? We shall know in the next couple of hours. So on this note, I want to be calling it a day here. So this is the last pair we are going to be treating for today. I hope I was able to simulate all the possible scenarios that will happen, and you are well equipped to be able to take advantage of any of this trading opportunity when they finally happen. So on this note, I want to wish you best of luck during the UK and the New York session today, and I look forward to seeing you right in the comment section as usual, as I will be updating you from time to time if there are any sudden setup that comes up or shows up on the market structure. So thank you very much, and I look forward to seeing you same time tomorrow too as well. 8:05 a.m. UTC as usual, as we get prepared for the UK and the New York session tomorrow too as well. Do have a wonderful evening, everyone. Bye bye.